Imagine being a responsible homeowner for 10 years, never once filing a claim, doing everything right, and then one day an insurance company tells you that you are uninsurable. Not because you burned your house down, not because you filed claim after claim, but because 2 years ago you picked up the phone, asked a question, and then decided not to use your insurance at all. That's it. That's the whole crime, and now you're being punished for it. This is a real situation that happened to a real homeowner. And honestly, when I first read about it, I had to read it twice, because I couldn't believe what I was seeing. If you have home insurance, and most of you watching this do, you need to hear this story, because what happened to this person could happen to you too, probably without you even realizing it. Let's set the scene. This homeowner had been with State Farm for 10 years. 10 years of paying premiums. 10 years of no claims. By any reasonable measure, this is exactly the kind of customer an insurance company should want to keep. Loyal, low-risk, responsible. They owned their home, they paid their bills, and they took care of their property. Then one day, a pipe started leaking. If you've owned a home for any length of time, you know that sinking feeling. You hear water where water shouldn't be, or you see a stain spreading across a ceiling and your stomach just drops. Because you know what that means. It means money, and potentially a lot of it. So this homeowner did what any reasonable person would do. They tried to contact their local insurance office. Couldn't get through, so they did the next logical thing. They went online and submitted a claim. They weren't trying to commit fraud. They weren't trying to game the system. They had a problem. They had insurance for exactly that kind of problem, and they used the tool that was available to them when the phone option didn't work. State Farm called them back and explained the situation. The repair, it turned out, would cost less than their deductible. For those who don't know, your deductible is the amount you pay out of pocket before your insurance kicks in. So if your deductible is $2,000 and the repair costs $800, filing the claim doesn't actually get you any money. It just gets you a mark on your record. The State Farm representative, to their credit, actually explained this and essentially told the homeowner they were better off just paying for it themselves, which is exactly what the homeowner did. They thanked State Farm, closed the claim, paid the repair bill out of their own pocket, and moved on with their life. Fast forward 2 years. This homeowner is now buying a new house. Exciting times. They call State Farm to get a quote on homeowner's insurance for the new property, and this is where everything goes sideways. State Farm tells them they are uninsurable. Let that sink in. A 10-year customer who has never once collected a dime in insurance benefits is being told they cannot get coverage. And when the homeowner asks why, the answer they get is almost unbelievable. The reason is that inquiry from 2 years ago. The claim they submitted were told not to use and paid for entirely out of their own pocket. State Farm classified that as a loss, not a paid claim, not a collection, a loss. And according to their system, that loss makes this person a liability. Now the homeowner is left completely blindsided, trying to buy a new house, scrambling to figure out insurance, and being told by an agent that they'll have to reach out to underwriting to see if an exception can be made. Meanwhile, this person has a real estate transaction in progress, and the clock is ticking. So what is actually going on here? Is this normal? Is this legal? And how on earth does a claim you never collected count against you? Here's the part that's going to frustrate you, because it frustrated me too. The answer is yes. This is technically within how the insurance industry operates, even if it feels completely absurd. When you submit a claim, even if it goes nowhere, even if no money changes hands, it gets recorded in a database called CLUE. That stands for Comprehensive Loss Underwriting Exchange. It's essentially a credit report for your insurance history, and insurance companies use it when deciding whether to cover you and at what price. The key thing to understand about CLUE is that it records the inquiry, not just the payout. So if you call your insurance company and report a potential claim, that event can show up on your CLUE report. Some insurers are more aggressive than others about how they interpret those entries. Apparently, in this homeowner's case, State Farm flagged that submission as a loss event, even with $0 paid out. Now here's where it gets even more maddening. The insurance company's own representative is the one who told this homeowner not to use the claim. They made the right call, they followed the advice they were given by a professional, and they're still being penalized for it. There's something deeply broken about a system that punishes people for using it responsibly. And before you think this is just one isolated incident, let me tell you, it's not. This kind of thing happens more than people realize. Homeowners call to ask a question about whether something might be covered, never actually file anything formal, and still end up with a mark on their record. Or they file a claim, get told it doesn't meet the threshold, pay out of pocket, and years later discover it's quietly been sitting on their insurance history like a scarlet letter. The really dangerous part is the timing. This homeowner found out about this problem in the middle of buying a new house. That is the absolute worst moment to discover you have an insurance issue. Mortgage lenders require proof of homeowner's insurance before closing. If you can't get coverage, you can't close. If you can't close, the deal falls apart. The financial and emotional stakes couldn't be higher. So what can you actually do if you're watching this and thinking, wait, could this happen to me? First thing, pull your clue report. You are entitled to a free copy of your clue report once a year, and you can request it through LexisNexis, which is the company that manages the database. Most people have no idea this report exists, let alone what's on it. Check it, look for any entries that seem inaccurate or that you don't recognize. If you find something wrong, you have the right to dispute it. Second, think very carefully before calling your insurance company just to ask a question about coverage. I know that sounds backwards. You'd think you should be able to call your insurer with a question without it counting against you. But in the current system, how an inquiry is logged can vary, and some companies do create a record the moment you mention a potential incident. If you're genuinely unsure whether something rises to the level of a claim, you might be better off calling an independent insurance agent first and asking for general guidance without mentioning your specific policy. Third, if you do file a claim and then decide not to follow through, ask your insurance company directly how that will be recorded on your clue report. Put the conversation in writing if you can. Send a follow-up email summarizing what was discussed and what was agreed upon. That paper trail could protect you later. Fourth, shop around. If one insurance company tells you they can't cover you because of an old inquiry, that doesn't mean every company will feel the same way. Different insurers weigh clue data differently. An independent insurance broker can submit your information to multiple carriers simultaneously and find one that will work with your specific history. Don't let one company's underwriting decision make you feel like the whole market is closed to you. Fifth, if you're in the middle of a real estate transaction and this happens, escalate immediately. Ask to speak with a supervisor. Ask specifically what documentation or evidence would help the underwriting team make an exception. Sometimes a letter from the original claims representative confirming no payment was made can help. Sometimes a copy of the repair receipt showing you paid out of pocket can shift the conversation. Don't just wait passively to see if underwriting will be merciful. And finally, let this story be a reminder that your insurance history is something you need to monitor proactively, the same way you monitor your credit score. Most people only think about insurance when something goes wrong, but by then, it's often too late to clean up any surprises on your record. The homeowner in this story did absolutely nothing wrong. They tried to be responsible, they followed professional advice, they paid their own bill, and they still ended up in a nightmare situation in the middle of one of the biggest financial decisions of their life. That's infuriating. It's also fixable if you know what to look for before it becomes a crisis. The insurance industry has a lot of mechanisms in place that favor the company over the consumer, and most people don't find out about those mechanisms until they're already caught in them. The more you know going in, the better your chances of coming out on the other side without getting burned. If something like this has happened to you, if you've been denied coverage or hit with a rate increase over a claim you never actually used, or if you found something unexpected on your clue report, drop your experience in the comments. Other people need to hear these stories, and this community is a good place to share them. And if you want to keep learning how to protect yourself from the hidden traps inside the insurance system, subscribe. We cover exactly this kind of thing. Real situations, real consequences, and real information you can actually use.